emerging markets are concerned, they've already been beaten down to pulp. So, yeah, I think that they can keep underperforming a bit as long as these fears are there. Liquidity dries up in these markets. But I think that my own entire case has been that the last decade was when emerging markets had their worst decade since the 1930s as far as emerging market equities was concerned. So we are sort of getting ready to sort of re-engage in these markets and be more active in the coming few years. Now, how long this health sort of scare lasts, I don't know. We have all become or been forced to become health experts. But I think that as far as emerging markets are concerned, there is considerable value out there. It just is that, like most value in the world, this is not going to work until a new sort of regime takes shape and this very growth-oriented market comes to an end.
Do you think we see more major central bank easing, and do you think that supports equities?
Yeah, but I think that's also the hope. That's really the problem as far as equities is concerned. There's so much hope out there, which is that, yeah, the central banks are there. There's the Fed put. There is the Trump put. But, yeah, to the extent that there is no real inflation out there, which is what the central banks are focused on, we could see more easing. But I saw the clip earlier from Larry Kudlow as well. And I just don't think that there is a case for the Fed to rush in here, all because we have had a pretty sharp sell-off for a couple of days. Because then once again, they'd be feeding this beast, which is that every time markets sell off some, we panic, cut interest rates, pump more liquidity, and the beast gets even bigger. That, for me, is a much bigger concern than the fact that we have sold off for 2 or 3 days.